Hi, thanks for having me. It's a pleasure. Before I get started with taxes, just want to appreciate Sumit and the entire CoinDCX team for taking this initiative. It's very important what you guys are doing, and given the current scenario where the income tax authority has started taking a keen interest in cryptocurrency transactions, they've been issuing notices recently. So it is an important time to understand what taxes are all about according to cryptocurrency transactions and what kind of liability any trader or investor is looking at. Also, given the fact that we still have about a week to go before the end of the tax filing deadline, I hope I'm able to clear your queries out and help comply with tax laws in a much better manner. I love this question. This is the most commonly asked question and probably the most contentious one also. Most people are under the impression that because crypto is not a specifically regulated activity in India right now, therefore tax laws should not or do not apply. The short answer to this question is yes, of course, taxes do apply to crypto transactions, all sort of crypto transactions. And the long answer is that basically the income tax laws are structured in a very simple manner. The income tax laws cannot foresee or anticipate every different sort of income and then start listing it out in the income tax laws. So what they've done is simply say all incomes are taxable unless exempt. So when you look at exempt incomes, you talk about incomes like agricultural income or maybe some sort of pension incomes which government employees earn. But apart from those specifically exempt incomes, all incomes, no matter what, no matter whether they're specifically mentioned in the Income Tax Act or not, are taxable. And also, I'd like to mention over here that I've been in touch with a lot of income tax officials over the course of my professional work, and it is their understanding too, which confirms the fact that all sorts of crypto incomes earned in India are taxable. Interesting. So before I answer this question, let's understand the legality of crypto assets in India right now. Crypto assets are not illegal in India right now. The only restriction in place right now is that the RBI put in a ban which tries to restrict cryptocurrency trading activities in India right now. So if you look at it in this way, crypto is not illegal right now. Crypto is taxable right now. And there is a rumor of a proposed ban which might come into play in the future. So crypto might become banned. What's happening right now is crypto is not illegal, crypto is taxable. So there is a big risk if, as per current laws, we don't comply, we don't disclose our incomes, and we don't pay taxes accordingly. We're looking at implications of fines, penalties, interests, etc. And in case, even if a ban does come into the picture later, which obviously is not a surety right now, there will be a 90-day period for us to disclose assets. So whether we disclose them right now or we disclose them during the 90-day period, there shouldn't be any risk. So the asset class which crypto assets could get defined under the income tax laws would depend ideally on the kind of transaction one is undertaking. For instance, if we take the business of mining, say you're running your own hardware to mine any sort of crypto asset, then it will be considered as a commercial activity. And being a commercial activity, you will have to disclose incomes made from mining as a business. Therefore, the crypto asset which you are mining becomes sort of stock or inventory which you are generating, and then when you sell, you derive your income. Similarly, when you talk about trading, so trading basically means that you buy and sell crypto assets at very, very frequent intervals. Say maybe you make 10, 15, 20 trades a day, and you are actually trying to profit off the volatility or the fluctuation in daily prices. And in this sort of situation also, you will get classified as a commercial activity or as a business, probably as the business of cryptocurrency trading, and you will have to offer to tax your income as a businessman would. So again, your crypto asset becomes your inventory or your stock which you keep buying and selling in order to make money. The third classification which is possible is that of an investor. In this case, you buy crypto assets and you intend to hold them for a considerable period of time, because what you want is you want to earn income on appreciation in the long term, or as we call hodling in in our parlance. So in that case, your crypto asset gets classified as a capital asset on which taxes will be payable under either long-term capital gains or short-term capital gains, depending on the period for which you have held your crypto asset. Thank you. It was a pleasure talking to you, and I hope I was able to help out with at least the basics of crypto taxation. I hope everybody understands the basics now. So, in the next video, we'll be taking it forward to a little bit more specific questions. And in case you have any other queries, please do feel free to write into us. Drop in a query in the CoinDCX comment section, and we'll be happy to get back to you. Cheers.